World Bank urges South Africa to streamline regulations and reform black ownership laws for economic recovery. In a recent analysis, the World Bank has called on South Africa to alleviate its excessive regulatory framework and reform the black ownership laws that exert pressure on its economic progress. Addressing these issues could potentially reverse the country's faltering growth trajectory, according to the report released by the Washington-based financial institution. As of 2023, South Africa is witnessing real output per capita figures lower than those recorded in 2007. The nation grapples with one of the highest unemployment rates globally, alongside persistent inequalities. The World Bank criticizes the regulatory environment for being overly burdensome, not only stifling businesses and citizens, but also crippling public administration capabilities, particularly at the local level. This scenario grants avenues for corruption and inefficient governance. South Africa's GDP growth averaged below 1% annually over the past decade, a period marred by government corruption, mismanagement, and continuous bailouts for inefficient state-owned enterprises. The World Bank emphasized that South Africa's black ownership rules, enforced post-apartheid since 1994, mandate companies to distribute a 30% shareholding to historically disadvantaged groups. These rules were initially designed to address past injustices suffered during the white minority rule, but now require simplification and modernization to align with the current market realities. The report recommends the adoption of equity-equivalence investment programs by the Department of Trade and Industry, which could serve as a simpler alternative to the stringent conditions linked with current black economic empowerment policies. This shift could potentially lighten the load on the country's economic framework, making it more attractive for both local and international investors. Further, the World Bank stresses the importance of creating a more supportive environment for small businesses and low-skill workers who currently face significant challenges due to the intricate web of regulations. These challenges include navigating the complex system and a disproportionately high income tax burden, which acts as a barrier to formal employment. Additionally, the report highlighted the stalled talks with Elon Musk's SpaceX regarding the Starlink internet service launch in South Africa. Conflicts arose due to the empowerment regulations, which Musk critiques as racially biased. This situation underscores the need for regulatory reforms that can foster innovation and technological advancements without being prohibitively restrictive. In conclusion, the World Bank advocates for a rebalanced economic model that eases the process for new entrants in the market, reduces incumbent protections that hinder competitive growth, and suitably adjusts labor and industrial policies to better reflect the realities of the market. This comprehensive reform is crucial for South Africa to step off its current path of economic stagnation and maneuver towards a trajectory of robust economic growth and equity. Thank you for choosing Satori News.